Hello, everyone, and welcome to the Week in Review. I say it every week, but what a week it's been. Um, I don't know where else to start except to begin with the news of last week, which has continued to be the news of this week. The ultimate, or the sort of fallout from the collapse of UST, what it's meant for the markets generally, as well as companies that had invested in UST or had put money into Anchor or various other ways they had engaged with the coin. We also had some pretty bullish moves from both some VCs and some social media companies that we'll talk about here in a little bit. And I guess to sort of round things out today, we're going to talk a little bit about what we're doing to sort of cope with these bear market blues that we're all experiencing of late. So, yeah, why don't we go ahead and get started? Let's see, where to begin? I guess we can start with Terra, as we sort of have that elephant in the room. It's worth talking about. We ran a report this morning that Do Kwon is currently under investigation in South Korea for Ponzi scheme charges. That the prosecutors are apparently scrutinizing whether or not the promise of 20% yields on Anchor protocol, which was admittedly unsustainable from a lot of different perspectives, constituted a Ponzi scheme. I don't know what there is to say about this at this point, except to say that Do Kwon seems to be in a lot of trouble. This is not the first bit of trouble that he's run into. We also know that he may have a pretty substantial tax bill as well as some tax liability. So yeah, it's also, I almost forgot, a group of investors is also suing him, and from I can't remember which country they're suing from. I want to say there are American investors suing. I'd have to double check on that. But anyway, there are a number of class action lawsuits brewing against him for investor losses and so on and so forth. So yeah, what do we make of all this, Tim? I see you've unmuted. Do you have some commentary on Mr. Kwon?
I think. Yeah, so as we reported this morning, I think we were the first publication to get onto this. So Terra, Do Kwon has been investigated for running a Ponzi in South Korea. It seems like some kind of class action lawsuit, like you mentioned, South Korean prosecutors actively investigating it. I thought it might be a good talking point to sort of ask, what do we think about that? Can they win a case to prove that Terra and UST and maybe Anchor protocol as well in there as well, is it actually something in class as a Ponzi scheme? And if so, what does that mean for the rest of the crypto space? I mean, clearly, it had some fatal flaws, as we've all seen. But does that really constitute calling it a Ponzi scheme in particular? I'd definitely like to hear, I guess, what the members of the research team think about this. So, Ant and Nivesh, do you have any thoughts?
Yeah, it's interesting. I'm now looking up the definition of a Ponzi scheme just to make sure I get this absolutely right, because it's one of those technical terms, isn't it? And presumably there's going to be some kind of like article of Korean law that that states exactly what it is, and if they believe that that's the case, then they're going to go after him. They've got presumably access to all that on-chain data to track all the conversations about who sold what to who, where and when, and that sort of thing. And then there was also the we did see a document at one point, didn't we, about the Korean company being what was it? It's not bankrupted is not the right word, but closed down effectively. They kind of like voluntarily closed down this thing. Now, was that? I don't know. I saw the article, and I know that we were asking ourselves whether or not it was legitimate. So, are you
referring to? Go ahead, Tim.
Go on, Tim.
So, as far as I've seen, and correct me if I'm wrong if you have conflicting information, but that was sort of just a procedural thing. a lot of people framed it as like, oh, he's, it happened about 3 days before Terra ecosystem collapsed, that he'd closed down the company and transferred it to Singapore. But as far as I can see, that was just a normal thing that companies often do to sort of relocate like that. He didn't close down in South Korea, he sort of relocated it to Singapore. And from people who are much more knowledgeable about it than I am, they seem to believe that there wasn't anything nefarious there. It was just a routine operation that the company Terraform Labs was doing, and it was just a poor timing, I guess.
Yeah. I read. Sorry, go ahead.
I was just going to say that kind of makes me a little bit suspicious, to be honest. Is there such? I don't know. Is there such a thing as poor timing in this situation?
Well, perhaps it might have been better to say like it didn't mean anything that they switched the location of the company from South Korea to Singapore. At least where we're at now. Maybe further down the line, if some of these lawsuits do pick up, it might end up being a point of interest. But Nivesh, did you have something to say?
Nivesh, we can't hear you if you're speaking.
All right. Yeah.
He'll be back.
Yep.
We'll carry it along until he gets back. I don't know. Like, I had to think about what the definition of a Ponzi scheme was as well. Like, that's one of those terms that we kind of throw around pretty loosely. I think that because the mechanisms of, I guess the questions here have to do with the extent to which crypto is qualitatively different from traditional markets and traditional finance. Like, the UST algorithm is not really, I don't know of a traditional analog in finance. So I guess from my uninformed perspective, I guess a case would be whether or not the algorithm of UST would be considered effective backing for a currency, or if it just gets demonstrated in a court to have been a house of cards that was deceiving investors. And I really don't know what the case is. Like, I get the feeling that from the Terra ecosystem that there was a genuine belief that this mechanism was going to work and it was going to hold and it was something worth believing in. But it may very well be the case that prosecutors intend to show that this talk of a stablecoin algorithm was just smoke and mirrors to take advantage of the uninformed. I don't know. What do you guys think about that perspective?
I mean, yeah, as I sort of spent a little bit of time with a stablecoin company before being here, didn't I? So I kind of, maybe naively, I don't know, but I kind of tend to believe that potentially the algorithmic stablecoins can work. Although I've obviously in the wake of all this, I've sort of actually listened to a few podcasts and so on, and I heard a really good one where somebody was sort of saying, algo coins, yes, when the market is on the way up, yes, they can, but when the market is on the way down, then things are quite different. And there's also a suggestion that I heard that the market cap of Luna would have needed to have been around about 9 times higher than UST's market cap, which it might have possibly got somewhere in that territory at the height of the summer or something like that. But certainly recently it was nowhere near that. So, I don't know, but it goes to like the question of value, doesn't it? Like, what has value? And this algorithmic counterpart, like if it derives its value from the utility of the network, then I guess it can have value. Okay, so if it is somehow funded or has access to transaction volume or something like that from the network, then yes, it can accrue value of its own, and therefore you could, in that case, I guess you could say it definitely could, if there is sufficient volume on the network, act as a meaningful counterpart to a stablecoin. But if it doesn't have that access, then you have to start to question, well, where does the value come from? So yeah, that would be my take.
I think that makes sense, and it sort of, it strikes me as an algorithmic stablecoin is a new financial instrument. It's a new invention, and whether or not, well, all the implications that come along with that. Whether it's hard to say that I was deceiving people if I was just genuinely trying to invent something new. And in good faith thought it was going to work. Nivesh, I saw you unmuted there. I would be curious to get your input on this as well.
Am I audible now?
Yes, you are.
Yeah, okay. Actually, I have like quite the opposite view here, because I think that algorithmic stable coins, like I was reading through some of the papers and some of the interviews, and these are basically seigniorage shares. And what happens is, like, you try to peg the value uh, to something, and when you create it out of thin air, something that is Luna or Ampleforth or Basis Cash, then when there is no trust, and when you look at the other side, there is no value, like there is no inherent value. So as Anthony said, that if the protocol accrues value from the network, then it will be able to sustain the value. And I think in this respect, instead of making it a dynamic equilibrium within the network itself, I think what an ideal situation would be that a protocol like Ethereum or Bitcoin backs a stable coin, because that's how we know that that protocol has value to. Like, it's exactly what Anthony was saying, but to embed that and to start a cycle, I think Luna became as close to, like, winning it or actually becoming a reality or making algorithmic stablecoins a success. And even at 30 billion of a valuation, it could not sustain the stability. Like, I think the Luna Foundation thought that all they had to do was keep pumping money to cover their 20% yield. And I don't think that they ever imagined that there is going to be a bank run. So if let's say there is a bank run on the US dollar right now, we know that it's backed by the Feds, it's backed by the government, and that's how the trust comes from. So I've really grown skeptical of algorithmic stable coins after the downfall of Terra. And it's not just because of this one incident, but like in throughout the history of money itself, these protocols have these designs haven't worked. So yeah.
Yeah, to sort of riff off what Nivesh has just said, something that dawned on me over these last couple of weeks is that I watched Iron Finance and the Titan token. Don't know if anyone remembers that from, it must have been over a year ago now. But I saw that collapse, and I saw, who was it? There was Mark Cuban got burnt by it, which kind of put it on the map. And like, that should have warned me, I guess. Like, there were a lot of similarities between what happened there and what happened with Terra and UST, but it just didn't click for me.
Did the Iron Finance coin work the same? Was it an algorithmic one as well, just the same?
It was partially the same. It was like 75% backed by USDC, 25% backed by Titan. So, but it worked on a similar principle, I think, where you could mint iron.
Yeah, that's right. There was some sort of exploit, wasn't there, where the counterpart token was kind of like effectively like sent to zero, or something happened, if I remember. One thing that Nivesh said that interested me was when we're talking about the definition of whether or not it's a Ponzi. He reminded me that whoever it was topping up the funds for the 20% yield on Anchor. So I suppose, depending on like the legal structures of all the different companies involved, if Anchor have been putting money into it as well, then perhaps that is kind of like an escape from it being classed as a Ponzi, because it's not just all the investors that are being asked to put money into the scheme for the people at the top. So that might be an interesting thing to look at in terms of the legal structures.
Exactly. I mean, if they were using the treasury of from UST or Luna, then it's like it is what, like, it actually defines what a Ponzi scheme is. Like, you take money from a certain individuals, and then you attract more people, and then you use your initial liquidity to pay new users, and that's how you just keep growing the triangle bigger and bigger. So if they were using the treasury funds, then they are certainly at a risk. But if they were funded externally, then probably it, like, they would be able to show their losses or how they were funding it. Maybe it wouldn't be a Ponzi, but still, it, like, there has to be something about misleading, and uh, I am not sure about the legalities here. So, but I think he would be looking at some sort of repercussions at least.
One thing that occurs to me is, so often when you engage in any, I was never a Terra user, really. I never held UST. I never really engaged with the protocol, in part because I didn't quite trust it. Where was I going with this question? I'm sorry, I've completely lost my train of thought.
You were talking about trust, weren't you?
Yeah,
trust. And you made me think that actually, I'm glad that I didn't use it either, only because I didn't quite get round to it. I was kind of like just always too busy. But there was a point where I sort of thought, do you know what, I'm going to put my tax money in there. And luckily, I never actually did. So
I thought about it. Yeah, I thought about it too. Oh, I remember what I was going to say. It was this. There was this sort of implicit, not quite guarantee, but it somewhat assurance that Terra's outright when you first. Connect. For those of you similar nature at some point, and do you think that's enough to?
It's a global wonder. Even if those disclaimers are there, like, to what extent will they stand up in various different courts of law around?
I mean, I wouldn't assume that I have any legal recourse in comping my funds if I lose anything to any crypto protocol, because I just assume that at some point I've signed away that right. But I'm not sure. I guess we'll find out. I want to move on to. I want to keep the stablecoin conversation going, but do we have any last thoughts on UST specifically?
Just the one thing that we can take away from this is that people are going to overuse the word Ponzi scheme to describe things for at least the next year going forward. That's all I have to say.
Well, I mean, they've been calling Bitcoin a Ponzi scheme since the beginning, right?
Yeah, true.
All right. I want to talk about another stablecoin that was in the news this week and the previous week, and that was Tether. Now, Tether briefly depegged. Was it this week or late last week that it depegged? Does anybody remember?
I think late last week or very early
late last week.
I agree.
It was. It was around then. But yeah, it hasn't collapsed in the same way UST has, and it's obviously a very different mechanism. It's backed by USD. Tim, you wrote a piece on Tether this week. kind of making the case that it might be in a stronger position. That was you, right, Tim?
Yeah, it was.
Okay, cool. That's up. I was just reading it beforehand. I just knew someone on the staff. But yeah, what's going on with Tether? Like, is that a safer haven, or should we still be worried?
Well, I guess I should say the thing that got me interested in covering the topic in the first place is the reaction that a lot of investors checking on social media had to the brief USDT Depeg that happened. And so I just sort of wanted to really dig into, why did UST collapse? How is USDT maintaining its peg? And what are the risks going forward? So yeah, I guess to sort of summarize it up, as you may know, USDT is collateralized. It's backed with collateral. The company that runs it, Tether, have faced legal trouble in the past over making false claims about what exactly is backing USDT. I think in October last year, they had to pay about $44 million fine after an investigation by the New York Attorney General. So yeah, there's definitely been some bad history there with it. However, since then, they've had some audits, not the highest quality, I will say. There's some evidence to suggest that the companies auditing Tether are ones that they're sort of in bed with. They're linked in various ways, and that they might not be the most fair arbiters to decide whether or not its backing is what they say it to be. But they have released these reports anyhow, and they say, yes, we've got this much in cash, this much in commercial paper, this much in US Treasury bonds, and it adds up to more than the total market cap of USDT. The problem, I think, or I guess what's really happened this week, is a lot of people have just come out to question it. There's been a real campaign of, I guess, FUD, fear, uncertainty, of doubt towards Tether. People just outright claiming that they're lying about these attestations. People saying that they hold like so much commercial paper, and that commercial paper is debt issued by Chinese real estate firms like Evergrande that were at risk of going bankrupt a few months back. So proper, not very highly rated commercial debt, for example. And basically just overall insinuating that USDT is, just one crypto crash away from bringing the whole system down. And me personally, I think there's definitely risks. It's a lower quality stablecoin compared to something like USDC from Circle that has a higher quality of collateral backing it, and I guess has slightly better reassurances over how you can redeem it. But I think that the people who are calling for the imminent collapse of USDT are over exaggerating, to put it mildly.
Yeah, thanks, Tim. Having even just a little bit of backing, or partial backing, I think, even I won't get too deep in my personal thoughts on this, but I feel like even just if Tether were only 20% backed by actual cash, that would still feel better than nothing, or just a pure algorithm. Ant, what have you got to say?
I know that Circle apparently are in discussion with regulators. So yeah, the company Circle that backs USDC or runs USDC, whatever it is, they are actively in discussion, supposedly, and kind of working with regulators to ensure that they are they're kind of okay, that they're in the green, as it were. And I think that is why when the obviously UST had crashed anyway, but then when the USDT peg just started to slip, there was a very clear move in investors from USDT into USDC. So I think USDC is seen as the safest haven of all. However, bizarrely, USDT has got a much higher market cap, hasn't it, by maybe as much as 50% higher than Circle's, or maybe not that much, but it's clearly higher. So there's a big kind of risk a trade thing going on here, isn't there? Where in theory the money's all worth the same, but people are making choices and moving from one thing to another in order to just kind of like make sure that they're suitably protected on a risk front.
I think it's an interesting point you bring up there about how USDC does have a smaller market cap, but it's perceived to be the better stablecoin. It's kind of like a trade-off, right? USDT have been able to mint, a much higher amount of their stablecoin, and liquidity is king in this market. If you have a higher market cap, it gets more usage. But the trade-off is, they can't say, yeah, we hold $1 for every USDT. It's like, well, some of it's commercial paper, a lot of it is US Treasury bonds, and I think the ultimate fear is like, yeah, if you had a situation like 2008 financial crisis again, are they really going to be able to sell all of those assets and get the true value for them so that they could pay back every single USDT holder one-to-one? I think it's very difficult to say yes to that. Whereas USDC, they can't put as many stable coins on the market because they're actually trying to hold $1 for every USDC in circulation. And there's an interesting post by Arthur Hayes this week. Those who have listened to me before will know I'm a big fan of his.
Yeah.
Well, there's a whole other issue there, I know, but yeah, basically what he was saying is, where was I going with this? Oh snap! We've lost
Arthur stablecoins. Sorry, that's me putting you off. I'm another
So,
Arthur
yeah.
fan. I love the way he writes, so it's good.
So he's talking about USDC. USDT. Oh. Damn, I think it's gone.
At the risk of
say, risk.
Well, at the risk of taking away from what you were going to say or leading it somewhere that you weren't actually going, I think I see a point you're making about USDC. Like USDC is working very heavily with regulators, obviously, and I think it's because they want to be the stable coin. I think they're willing to move slowly and deliberately if it means that they have the dominant market cap one day. But that's just a personal take. Ant, what do you think?
Yeah, I mean, like, I think it's kind of like I said, USDC is in theory the safest one. I thought Tim's point about liquidity levels in the market is really relevant. That, yeah, like kind of USDC can't kind of put as much liquidity into the market because they're trying to have as far as we understand it, aren't they? They're trying to have a more kind of genuine amount of backing going on, where they're very sort of, I think they're more transparent with the amount of dollars per stablecoin dollar that they produce. Although I did note as well that USDT apparently, I saw something saying that they have some kind of like audit every day to update the value of all their assets. And
every
they
day.
publish that allegedly. Yeah, that's what they said. They said that the value of our assets is updated daily, and we publish it daily as well. So when they say update, they didn't just mean like on our website, as in like they actually check the value of their assets or something like that. So they were doing a lot to try and get things to be transparent and trustworthy, and I think that's where it goes back to that idea about risk. So yeah.
Yeah, I think they also like submit a quarterly report, but like as Tim was saying, it's not up to the highest quality, and they don't want to reveal everything that they have. There is some risk, but I think like if you look at it, it seems like something where USDC made a choice to be friendly with the US government, and it has received positive responses. And USDT Tether did not do that, and maybe that's why we are seeing some retaliation against it. But overall, yeah, like a lot of our industry and trust depends on it. So I'm not sure. I cannot like make a comment while like how much of it is back, but I hope at least, yeah, like as Jacob said, even if it's 20%, like it would cover around 20 billion of bank run. So at least like that much should be there.
Yes, something is better than nothing, as an old adage goes. Cool. Any last thoughts on Tether, Tim?
I just remembered the thing I wanted to mention earlier.
Oh, excellent.
So my point was, well, what Arthur Hayes was arguing is that when you have a stable coin that's backed one-to-one with US dollars, you're going to have to keep them somewhere. And, USDC will have bank accounts with, I don't know who, but banks, and they're just holding all of the dollars there for them. And he argues that has a cost associated with it. It's not free for, he mentioned something about the velocity of money and time is money and sort of that kind of deal. So basically right now, they're holding like 40, 50 billion maybe market cap of USDC. The banks will perhaps put up with that because it's a small amount, but it raises questions on whether USDC can really grow that much further, because there's going to be a point where the banks are like, hey, hold on a minute. We don't just want to be holding these massive amounts of cash for you just so that you can say your stable coin's backed, and not put that cash to work doing something. And so you've got like a push and pull there, they're going to want to use that cash to finance loans or whatever, earn a yield on it. But USDC is like, no, we don't want that to happen. We need it to be readily accessible so that we can say, yeah, you can exchange it one for one with US dollars, the USDC stablecoin, and that looks good for them. People will look at it and be like, yeah, that's the stable coin I want to own. That's safe. They have a guarantee there. So it's not really a good long-term solution to have these fiat-backed stable coins, basically, but probably not something we'll have to deal with for a few years, unless crypto really blows up quickly. Fingers crossed.
Yeah, that's a very interesting point. Actually, if you imagine, even if these funds are getting 3% return annually, then by not putting their liquidity to work behind the scenes, I mean, these service providers are losing on billions of dollars every year. So I think that's like a business choice that they made, that they're not going to do it, and keeping it in government bonds is like the safest as it can be. And I think even in the 2008 crash, as Tim said, I don't think the US Treasury was affected, or there was like a threat of a bankruptcy on a government level or national level. So
No.
yeah, I wouldn't mind keeping them, trusting them with when they say that they have government bonds. I think it's fine.
Yeah, I mean, every asset includes some level of risk. Sorry, Tim. Go ahead.
I was just going to say, I guess that explains why Tether are making such a big push to shrink the amount of commercial paper they're holding and replace it with treasury bonds.
Right.
Yeah, definitely. Companies do carry a lot of risk, like a lot more risk than governments. And as I said before, the Fed can always fund the US Treasury, but will the banks indirectly will be willing to fund the companies? We are not that sure of that.
I wonder if there would be some compromise position here in which a portion of the funds backing, say, a USDC or a similar stablecoin, fiat-backed stablecoin, if you could make an agreement with the bank to hold, let's say, half of the fiat just in cash reserves, and maybe allow the other half to be, loaned out or put to work some other way, to use the colloquialism. But that'd be, I don't know, would you guys have confidence in something like that?
Suppose it's going to be better than a completely algorithmic stablecoin, isn't it? Where, like, as we've seen, it's kind of like a sort of hybrid idea, isn't it? Where theoretically the money's there, however, some of it is being put to work. I guess as well, if it was within the legacy or the TradFi banking system, then however that money is put to work, that's going to happen within a regulatory framework. So you're going to presumably have some sort of levels of safety built into there, some sort of risk management. So it sounds good in a way.
Yeah, well, Cool. I was kind of just
I thought
thinking.
anyway.
I was just thinking on the fly when Tim presented this problem.
Yeah.
I was like,
It sort of almost, it just almost then started me thinking off about CBDCs and that kind of stuff. Yeah, like maybe there's a conversation in there, but to be honest with you, I wouldn't know how to answer it right now, so I haven't quite thought that far ahead. But...
I think Circle wants to be the CBDC of the United States.
Okay.
Just a thought.
Interesting.
They want to propose a private sector solution.
Yeah.
That I could be totally wrong. I probably am. All right, cool. Let's talk about some more uplifting news, or at least some bullish catalysts. We saw two big institutional players this week. We'll talk briefly about what they've done. The first was Andreessen Horowitz started a $600 million fund, I believe. 600 million. I'd have to yes. They call it the game. I think it's called Games Fund One. It's a game fund, and it's primarily for developing metaverse games. They said that the company believes that the metaverse is going to be built by game companies, and that's the direction, or they want to help, or apparently want to help steer that direction. We also had some trademark applications from Meta this week that seem to imply that the company is looking much more directly at crypto applications. I think Stefan researched this one. But yeah, it seems to indicate that they might be exploring their own kind of crypto exchange. We know they're thinking about, or they're actively planning NFTs on Instagram. So Meta, for one, and A16Z don't seem to be perturbed by the bear market. What do we make of that? Is this an example of institutional players buying the dip, or I'm particularly interested to talk about Meta because they've kind of fumbled along the way, and if we're being perfectly honest, or at least from my perspective, there's the whole Libra disaster. I think they had to sell off what was left of Diem. Is that right? Does anybody remember?
They did sell it, I think, to Silvergate.
Yeah, they sold it. Yeah, and Silvergate, that was right. And I haven't checked Meta's stock price recently, but I know they kind of floundered in the wake of their pivot to the metaverse. But what do you guys think? They're doubling down. They're still involved in crypto. Is this a bullish? Is this a service you guys are excited about, or are you going to avoid this like the plague? Navesh, what do you think?
Honestly, after seeing so much of Andreessen Horowitz for the past 1 year, I am a bit skeptical here because it's like they're going with the trend. And I'm not denying that gaming has shown a lot of potential. Like there was a report last week from DAP Radar which showed that every other sector of the market has seen a drop in usage and volume, whereas the gaming has fared pretty well. But if you look at the tokens, their prices have fallen. And it's okay if the company is investing in, I think, metaverse gaming or blockchain gaming. But looking at so many projects over the past 3 to 4 months, what I've observed is there are two parts to it. One part is where you want to earn money, and the other part is they want to make a fun game. So that's why whatever projects that I have covered, mostly in my newsletters, I have focused on the teams where they are actually making an effort towards making a game that could make it to the traditional gamers. And it's a tough thing to do. I'm not just saying that they are only trying to find some exit liquidity for themselves, and there is a lot of potential, and we should be looking forward to it. But just because A16Z is will be funding in some of those projects, I don't think we should rush behind them too quickly, because if we see there is some evidence that they have used a lot of their marketing for exit liquidity. So I would say that finding the real usage, finding the real games where people are playing and probably making some money, or there is a chance to make some money in the future, or there is a short-term plan where you can find an optimum exit point with some profits. So yeah, that is important. But following them blindly, I would say that would be wrong. And like looking at many projects, and it's just not A16Z. There are some, like, gaming has a history where uh, a game would become successful because it was built from nowhere, and just because it had a network effect, people just started playing it, and a lot of them became famous. And with the absence of big names like Fortnite, or I would Epic Games, like the developer of Fortnite, and maybe CS:GO, and like all these big players are not EA Sports. They are not contributing to this industry right now. So I would say that anyone has a good chance of making a popular game like Axie once again, and maybe this time it won't be a Ponzi. And yeah, that was like, Axie was definitely a Ponzi scheme, because they were like continuously growing their cycle bigger and bigger and bigger. But yeah, there is definitely a lot of potential, but and it can come from anywhere. We should not be looking up to one VC in particular.
Yeah, I agree. I tend to think, like, it seems like, from the outside looking in, it seems like A16Z's approach to crypto investing is like almost a scattershot. Put money into everything, and um, surely some of it will pay off. And you're unmuted. Did you have a comment, or do you just
I
not
think
mute yourself?
no, just yeah. So I think
Yeah, that's cool.
I think crypto gaming, metaverse, NFTs are all these things need to happen, and they will happen. Like from an economic point of view, we are either at work or we are at rest, and we have kind of like DeFi within the crypto world, which is where we do our work to earn our money, and then we also need a space within the Web3 to go and do things when we're not at work. So it makes complete sense that that space should exist from a kind of like an economic point of view. It makes complete sense that somebody should try to build it and monetize it and so on. And I think the kind of like the next things is like, because I'm not so familiar with like A16Z and how they invest and stuff like that. But what I do think is, and I think this is kind of like what Nifesh is saying as well, in a way, like the traditional gaming companies need that they know how to build good games that just are to play just because they are games. And what we need is basically decent games to be made. I think the problem we have is that those game studios, with the investors that they used to working with, like a Web3 model of where they sort of basically go to their investors and say, look, sort of create this sandbox type thing called a metaverse. Then we just let people do whatever we want in it, or they want to do in it. Like, the people build the games, and we can't promise you what the quality of the games will be like, and we can't promise you how much money these games that the users make in Web3. We can't promise you how much revenue they're going to generate. I think for Web2 companies that are really, really good at making games, trying to sell that idea of have to just trust us to let the normies create this thing for themselves, and actually they'll be good at it, and you'll get rich, as investors you'll get your return from it. I think it's probably a really hard sell for the kind of investors that they're probably used to working with. So I think when we get to the point of Web2 companies brave enough to want to do that sort of thing, and we're able to team them up with companies like A16Z, who are used to investing in this space and are used to watching things get built, the users then kind of bring to life and build upon and create revenue from. So especially if we're looking at something like OpenSea, for example, which is, all the money in there, it comes from the creator economy, doesn't it? So I think when we can marry up the Web2 game companies with the Web3 investors, we might get some really, really cool stuff out of Metaverse, and something that's really successful, which is games that are really good to play, possibly made by the creators, and they empower the creators financially through revenue, as well as the investors that kind of fund the things in the first place. It might be a bit of a utopian dream on my part, I don't know, but I kind of feel like that's what needs to happen.
Yeah, but I think like the gaming companies have been reluctant because their their customers don't want them to do it just yet. They just want to play games. They don't want to make money. And
Yeah,
like,
they don't get it though,
yeah,
do they?
it's like, I don't know if it's a chicken and egg problem, but there is certainly some proof that despite what they say that it's just for games, there is a lot of money that is flowing in the system. Actually, I think more than 120 billion in 2020, if I remember correctly. So yeah, I think it's just a point where they must realize that uh, it it makes the system better. What we are doing is you don't have a bunch of centralized servers. You can move your characters between the games, and you can own them. And you when you want to leave the game, you can sell them. So if you have invested like hundreds of hours, or maybe even less than a few hours, like not saying less than a few hours, less than hundreds of hours, then you can have some value out of it, and you can pass it on to another player or something. So there's definitely value, but looking at it now, I think Sandbox or Decentraland or the most popular P2E games, they have less than 4,000 or 5,000 users per day. So right now, this is still looking like a zombie land, and there's a lot of work to be done, and especially in the space where they need more active user acquisition strategies. And I don't know how that will happen, because they have tried to capture the crypto crowd, and people are definitely buying the coins. I'm sure that there are definitely way lot more sand and mana, like the native coin for Decentraland holders, than actually the ones that are playing it. So, but unless and until those players come, it's not it's not going to take off, and it's just going to be like DeFi was in the early stages. Like, there was a lot of hype around it at some point, but then it died. But people kept on building on it, and then when the bull market started, some of them came out ahead of them, and most of them were building for pretty long. So I think that would be one factor where we see that teams are not abandoning their projects, and they are continuously building them. Then that's a positive sign, because we are not going to see much movement in the token prices, because that is subject to the broad market conditions. And I think that would be one important thing, like how long can the team sustain this? Because building games is not easy as well. It takes years, even for traditional gaming companies. When they announce something, they take months to actually launch it. And right now in the crypto space, it's like, I think 99.1% of the games are just that we are going to have the most epic game ever. And like, the first step is just having that game, and that is not even the most difficult step. The most difficult step will be getting players on it. So I think we should follow projects that are at least doing good with the first step, and if they have good partners, then they are eventually going to do with the second step.
Tim.
Yeah, there's some awesome points there by Navesh. Like, what I wanted to originally talk about was kind of jump back to what Ant said about how it might be a hard sell to get these Web2 game companies involved with crypto and blockchain. I completely agree with that. I think that what blockchain is offering is something that's kind of counter to what these companies know and how they make money. You know, it's going to empower the players. It's going to allow you to, you know, if you buy a skin for a character, for example, you can trade that to someone else. You don't have to just rebuy it from the company. So it's going to affect their profits. And I don't think they can be convinced in a lot of ways that it's a good idea. And again, like Navesh said, a lot of the players right now are very skeptical of crypto. They don't like it. There's ESG concerns there, you know, carbon footprint and all that. So my thoughts on it are that if the first big blockchain game that sort of goes mainstream, I think that it's very likely it'll come from some kind of independent studio. It'll be similar to how Minecraft got big. You know, it was just a small independent studio. They put something out there, people ran with it, the network effect blew it up, and then it got acquired by Microsoft, I think. Again, another point is also, just to end on, a lot of these crypto games that are coming out and being marketed, they're very much trying to market them towards crypto people, well, like Navesh said as well. I think it needs to target actual gamers, and it also needs to sort of like not focus so much on the crypto element of these things. If you look at some of the most successful games in history, and I was a big MMO player in the past, like World of Warcraft, RuneScape, and these games, real life economies built around them because they were so good. You know, real world trading in RuneScape, for example, was banned, and you could get banned for doing it. It was completely prohibited. But most, high level players knew what the going rate of 1 million gold pieces was, how many dollars that was worth, what you could sell items for on the real world market. Despite the fact that the Jagex, the game studio behind RuneScape, were trying to stamp out real world trading throughout most of the game's history. And the same thing in World of Warcraft. You had, a lot of gold farmers for, I guess, back in the 2000s. It was from people from China were heavily farming gold in World of Warcraft. And it's because the demand was there from players in, I guess, more developed countries. They were willing to basically just pay someone in China to farm that gold, because they could do it themselves, but it would take a long time. No, I can just expedite that. And I think that that's what really needs to happen for one of these games to take off. You have the crypto integration set up there so that, when a rich player that really enjoys the game just wants to be like, all right, I want the best items, I'm just going to buy them. The rails are already there. But again, it needs to be entertaining and fun, and there needs to be a reason for someone to want to pay $1,000 to someone for their items in the game.
Yeah, or actually they don't need a reason. They just want to buy it because they have spent so much time on it.
Yep, just as true.
All right. Cool. Thanks, Tim. Thanks, Navesh. Thanks, Nat. I think that those are all wonderful points. I think we could keep talking about this, but we've only got a few minutes left. And I want to get to our last topic of the day, and that is something we've all been talking about the last week or so, and that is surviving the bear. It's no secret that markets are down, people are scared. Some folks on Twitter are reveling in the panic and despair that's been brought about by this market downturn. So in our final minutes today, I'd like to go around the table and just sort of get everyone's reflections on not financial advice, and certainly don't have to delve into personal details about your own holdings or anything, but just general thoughts and reflections on what you guys are doing during what looks like it might be some sustained downtimes. Surviving the bear. I'm just going to go start from the left and go to the right on my screen. Let's start with Tim. Tim, dark times, what are you doing to keep yourself safe and prosperous?
Well, yeah. Just trying to think of something original to add, because I know what you guys have already written. I just read that before the call. So I guess dollar cost averaging, of course. Really deciding where I want to allocate funds to. Like Christian's mentioned in previous calls, I'm a big Ethereum bull too. I think that whereas in the 2017, 2018 market, a lot of people denominated their holdings in Bitcoin, I think things are shifting now towards more people are denominating their portfolios in Ethereum as sort of like the asset that they take all their profits back to. So I'm very much in that camp. I guess also just I did a newsletter on this earlier in the week as well about how gas price is really low most of the time. For me, about 9 to 10 a.m. in the morning when I get on, you can send transactions through on Ethereum for about 15 Gwei. It's really, really cheap comparatively. So experimenting with things, now is the time to buy an ENS name, I guess, if you've been wanting to do that for a while, or, if there's any protocols you think that might do an airdrop in the future, it might be worth trying them out now things are really cheap. Those are good things to keep yourself occupied with, prevent you from over trading or, FOMOing into things because you're itching to do something, for example. But yeah, so just keeping on buying ETH with my spare cash. I guess also to a smaller extent, I'm quite interested in Curve as well. Of course, it's one of the picks, but it's one that I feel is quite undervalued. And as soon as things pick back up in DeFi, I think a lot of the value will go back to that. I mean, not an expert opinion here, but it's just a feeling that I have.
Cool. Thanks, Tim. We appreciate that. And you're up. What are your reflections in these times?
So just building on what Tim said, I was listening to a webcast, whatever it was, a couple of days ago with, it was like the head of Uniswap, Kane from Synthetics, Danny from Arvo was there as well, and a couple of others I can't remember, but they were saying that they think that Ethereum DeFi will come back to life after the merge. So that means hopefully we will see that this year. So good news on your Curve front in that case. For me, I'm playing it safe as far as I'm concerned, so I'm going for layer 1 tokens, the bigger ones that have shown good uses, good adoption, and I shouldn't get too wrecked on. So things like Matic, Avalanche probably as well, maybe a little bit of Solana. I'm not very familiar with Solana, to be honest with you. It's not one that's ever really taken my interest, but certainly, yeah, in general, some of those things, and yeah, probably a little bit of Ethereum as well. So yeah, just for me, I'm just trying to gradually DCA into things, to those layer 1 coins. I'm not in any hurry to do it yet. I'm going to bide my time a little bit. But if I absolutely have to, sort of buy something to scratch the itch, then I will stay focused on the things that I'm interested in and just pick up a little bit of those for kind of like to get the DCA process going. Yeah, layer 1's for me, and that's it. Yep.
I'll take it. Nilesh?
Yeah, I think the best strategies in crypto has already been discussed by Tim but I think looking at the macro conditions, we are inches close to a recession or a prolonged bear market. So I'm slightly worried. So I would not that I have accumulated or a lot of stable coins, but I would like to keep some liquidity on the side, and that's probably, I think, as an insurance at this point of time. But then again, yeah, DCA is the best strategy. Trying out new protocols is the best strategy. Diversification to different layer 1s is the best strategy. Then one additional thing, a few things that I have been looking at is things that are trading at a discount. So if you see Olympus DAO has more money in its treasury than the total market capitalization of the OGM token, and I think we have been observing the same thing with GBTC for a while now. And I don't know, I am interested in those kinds of things, and I think that they provide you some cushion around for around 20 to 30%, where let's say if GBTC gets approved as an ETF, which I am actually hopeful about, because it has a lot of holdings, and I don't think there has been any claims or misdoings by them. So that is something that I'm looking at. Then Olympus DAO also, they have a good picture. They have a positive picture. I don't think the team is looking they definitely can, because they are anonymous, but I don't think that the team is looking to run away with your money. So yeah, I think it's going to be a long journey, and we have to be patient, but diversification and DCA and trying out new things should give us good rewards coming forward, like when we come out of this.
Yeah, thank you. Thanks, Savesh. And I'll round this out just by, we're on the hour, so I'll be brief. Yeah, I agree with that, what everyone has said. You know, the longer the bear market, the greater the buying opportunity, as far as I can tell. I've kind of been waiting for market conditions like this to kind of re-up my holdings, but I'll kind of preface that by saying that, you know, while market conditions are uncertain, I put a portion of each paycheck into good old-fashioned cash savings as well. But that's not to say that on days when I see that prices are down, you know, another $10 into Bitcoin, another 20 into ETH, you know, here and there, just averaging it out, playing it safe, and diversifying the assets. That's the name of my game anyway. Any closing thoughts from anyone? All right. In that case, we'll go ahead and wrap it up. We're just a couple minutes past the hour. I want to thank everybody for taking the time to spend an hour with us this week. It's been a great conversation. I think this was a good one. I hope you all had a good time, and thanks to everybody who participated. Have a great weekend, everyone.